Hey, good morning, everybody. Today is Wednesday, November 18th, 2015. My name is Cliff Backus, and this is your push button StockTrading.com daily video market review. Stocks closed mixed and at their lows for the day on heavier trading volume yesterday. New lows continued to outperform new highs by a wide margin. Large capitalization stocks outperform small, although small continue to outperform on a 10-day moving average basis. Advancing issues topped decliners by about 7 to 4 on the New York Stock Exchange. The New York Stock Exchange advanced decline line is beginning to look a little weak again. Our market timing model on the NASDAQ is now on a don't buy signal, having recently recaptured its 200-day moving average. A don't buy signal indicates that we should be off margin, we should have our stops at their tightest levels, and we shouldn't be adding new positions to our portfolios. The S&P 500 remains on a sell signal. A sell signal indicates that we should be off margin and aggressive traders can sell short. We should sell any long position that, if sold at current stop levels, would result in a loss. All stops should be at their tightest levels on all positions. Conservative traders may want to hedge their portfolios with contra ETF or exchange-traded funds. If you'd like help with your contra ETF strategies, please contact me. My contact information's on the home page. The O'Neill timing model, according to Investors Business Daily, is showing an uptrend under pressure, with 6 distribution days on the S&P and 5 on the NASDAQ. Distribution, or higher volume selling in the market, is a sign of institutional selling, and too much distribution in a short period of time can indicate that an uptrend is in trouble. Our timing models are giving us mixed bearish or certainly cautious signals. Be careful in this market. I wouldn't be in any hurry to buy or sell at this point. Keep your stops in place and at their tightest levels on all remaining long positions, and consider hedging portfolios with contra ETFs. As always, be sure to follow your written rule sets. If you'd like some help with portfolio management or with your written rule sets, please feel free to contact me. My contact information's on the home page. Let's start today with a look at the NASDAQ Composite. NASDAQ yesterday was down 1.4 points or 0.03%. We closed at 49.86, and notice how we, after a solid start to the day, closed near the low for the day. Trading volume was higher, but because we closed near the low for the day, we had a very weak accumulation day. For you followers of William O'Neill, we are in an uptrend under pressure. We've been in a confirmed uptrend since October 2nd. Right now, we have 6 distribution days on the NASDAQ. With this accumulation of distribution in the past few trading days, this cluster of distribution is an indication that this market may be in a little bit of trouble here. Right now, the market is bracketed by support down here in the 4,900 area. Notice how the market found support at that area back here. We found resistance at the same area right in here, and now we're acting as support right here. If the NASDAQ was to undercut that level, it would indicate that the market probably wanted to run significantly lower. For right now, we're calling that area support. NASDAQ right now is on a don't buy signal. A don't buy signal indicates that we should be off of margin, we should have our stops at their tightest levels, and shouldn't be adding new positions to our portfolio. Take off the markups here. And just a quick note. In order for the NASDAQ Composite to go from a don't buy signal to a sell signal, it would have to undercut its 200-day moving average, which is right here. We show in black. We're right there, so it wouldn't take much to change our timing signal on the NASDAQ from a don't buy signal to a sell signal. Caution's recommended here. Let's take a look at what the S&P 500's up to. S&P yesterday closed down 2.75 points or 0.13%. Notice how trading volume was higher than the prior day. Our definition of a distribution day is a day where the market closes down on heavier trading volume than the prior day. But in order to qualify for distribution, the market has to close down at least 0.2%. We didn't meet that minimum yesterday, and so yesterday does not count as a distribution day. The S&P closed at 2050 yesterday, and notice how it closed in the bottom half of its daily trading range. It also closed below its 200-day moving average. That's significant because that gives us a sell signal on the S&P 500. A sell signal indicates that we should be off margin and aggressive traders can sell short. We should sell any long position that, if sold at current stop levels, would result in a loss. All stops should be at their tightest levels on all positions. Conservative traders may want to hedge their portfolios with contra ETFs. As we noted, trading volume was higher than the prior day and was above average. The S&P right now is in an uptrend under pressure. I'm showing 6 distribution days on the S&P 500. The IBD doesn't count this day, and so they have 5 distribution days on the S&P. Right now, the S&P is bracketed by support down here in the 2044 area. Notice how that support goes all the way back to this low in the market. If we were to undercut the 2044 area, our next area of support would be down here in the 1993 range. Resistance is at our 2009 through August trend line. As noted earlier, we are on a sell signal on the S&P 500. Let's take off our markups here and notice that the S&P is very close to its 200-day moving average. As we noted, we're on a sell signal. If the S&P was to close above this 200-day moving average, which we show in black, that would change our market timing signal to a don't buy signal. That's about all I have for today. If you want to talk about any of the stocks mentioned today or any of our market strategies, please feel free to give me a call, drop me an email, or make an appointment. Come by the office, see what we're up to. Contact information is on the home page. Please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohanneson Liqueurs, Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohanneson Liqueurs, Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohanneson Liqueurs, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohanneson Liqueurs, Incorporated believes to be accurate. Ohanneson Liqueurs, Incorporated makes no representation that such analysis or calculations are accurate or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources, except where otherwise noted, and data we believe to be reliable. Ohanneson Liqueurs, Inc., its affiliates and subsidiaries, and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push-button stock trading is dedicated to the education of friends, clients, and paid subscribers. Push-button stock trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push-button stock trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of Push-button stock trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of Push-button stock trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.